Michael Quinn is Australia's #1 property investment educator and author of Property Wealth by the Numbers. Welcome to this week's Investment Insights.
One of the most important things that we can look at when it comes to finance is borrowing capacity. And it's really not taught, and I think it needs to be, and it should be taught to us when we're in school. In fact, I'd love to see us being taught when we're 17 years old how to protect borrowing capacity. It's vital that we understand how to do this. Really what happens when we go and get a loan, of course, the first question any lender or bank's going to ask is, how much do you earn? What is your ability to repay what I'm looking to lend you? And when they're calculating borrowing capacity, all different types of calculations can be brought out from different types of lenders, and the rules can change. It's not really a one-size-fits-all here. But typically, any of us are going to be challenged by one of two things. The first one is going to be our income, what we earn, so hence our ability to cover our living and our tax, and then be able to fund any new investments or lending, and of course, deposit and costs. And deposit and cost is going to come in the form of either cash or equity. If you don't own property and don't have equity in property, then we're going to need to save and show our savings. And post-GFC, the banks, rightly so, have tightened up the rules, and they now want to see genuine savings, and it can be challenging to be gifted any money, and all those sorts of things change with different lenders. But when it comes to borrowing capacity, rather than being intimidated by it, we need to learn and understand this. And new things have come in too. For instance, credit scoring. Credit scoring is, a lot of people don't know about it, but really what they're looking at is our history and our repayments, and it creates a score. And that might be our repayments on our credit cards, or our rate payments, or our mortgage payments, or our loan payments. And a lot of people might want to wait till they get the red bill in the mail. But these things can dramatically affect our credit scoring, and a computer can wipe us out before we even get to base one. So we've really got to learn how to look good for borrowings, what we need to do, genuine savings and the like, so that we're able to get other people's money to then buy growth assets, because really we can't save ourselves to wealth. So we need to look at what we're trying to do, learn to protect our borrowing capacity so that we're able to move forward, not just for this investment, but future investments as well. Borrowing capacity, it's really important that we learn how that works for us.
Hope you enjoyed these valuable insights from Michael Quinn. If you don't have his book, Property Wealth by the Numbers, please go to freewealthbook.com.au.